Howdy friends, thanks for stopping by for our latest livestock market report update. I'm Coulter Brown from the Northern Ag Network. Well, finally we received some fall moisture for a lot of the region. Good to see, but wish it had come in June, although we'll take what we can get. Markets certainly ran into their share of challenges over the month of October. It's definitely seen some seasonal pressure, but hopefully the majority of that is behind us. Before we dive into our discussion on the cattle futures, want to take a minute to thank our sponsors. Ag Risk Advisors has been with us since the start of this report, and we sure appreciate their support. I urge any producers who are considering options to manage drought risk in 2022 to reach out to them over the next couple of weeks and ask about pasture, rangeland, and forage insurance. The deadline to sign up is December 1st, so quickly coming up. PRF has proven to be a valuable tool for many ranchers, and also if you stop by their website at agriskadvisors.com, you can check out their long-range weather forecast that'll be available in mid-November. It'll be under the Weather Resources tab. In a year like this one, it can be difficult to know what the right decision is and what financial impact that will have down the road, especially with all the debate on tax policy in Washington happening. So look to the ag experts at Eide Bailly for help with tax planning, estate planning, drought disaster deferral options, and loss carryovers. You can find your local expert at eidebailly.com. Montana Fish, Wildlife, and Parks reminds hunters that we're all stewards of an incredible resource and that ethical hunting ensures we get to keep doing what we love. They ask that sportsmen remember to respect the land, landowners, and wildlife. And thank you to the Wyoming Beef Council for continuing to support this report and their efforts to support beef demand. Now, as I mentioned, many of our livestock markets saw pressure over the past month, but actually cattle futures found some recovery after they saw a lot of weakness in September. Live cattle futures gained $3 to $4 over the month of October, finding support from the Cattle on Feed report. There were bearish expectations for that report after September showed higher than expected inventory and placements, but actually cattle placed on feed came in 3% lower in the most recent report, so it looks like we may have turned the corner and supplies of fed cattle should continue to come in lower. Deferred futures are still offering an incentive for feeders to get calves bought, even though corn prices did increase over the last month, and that happened despite the USDA estimating a larger than expected corn crop. We usually don't spend too much time talking about grain markets in this report, but I should mention wheat because we saw a huge increase in price as tight supplies are supporting the market as a result of the drought. New contract highs for wheat have been seen across the board, and spring wheat prices are at their highest levels in 9 years. Shifting back to the fed cattle, the cash market was disappointing in October. Didn't move lower, but just was very slow to recover, just barely inching higher. Took most of a month to gain $1 on the cash cattle, but the needle does appear to be moving, and we're finally getting the cash prices to increase. On the hoof, we're averaging about 126 right now, and up to 200 in the beef. In the feeder futures, we saw some recovery as well after the pressure in September. We saw a lot of resistance though at about the 160 mark for these nearby feeder contracts in October, but as we look out to May, that contract above $1.65. Box beef prices did trend lower for most of the past 2 months here, but at the end of October, it looks like we're finally starting to turn the corner there too, and that should improve as the holiday beef buying now picks up. Well, turning to the cow and calf markets, that's where we saw the most pressure, and it definitely was regionally specific depending on where producers were. It's just the fall calf run, and so that does put pressure on the market, but definitely exacerbated by drought. A lot of calves coming early this year and way lighter than they normally would, and when we look at the cow market, that definitely felt pressure as those cows coming in thin condition and definitely feeling pressure. Kind of a new issue that we saw this year was trucking availability, just extremely tight, maybe the tightest we've ever seen. Now, that's due in part to the liquidation we're seeing in the cow herd as a lot of cows are leaving the region, but also calves sold on the video are delivering and then the large numbers coming to our stockyards. So that put pressure on the market, especially the average and lower quality feeders, as buyers just didn't want calves that couldn't have wheels put under them immediately. Front-end calves still doing well, and those that had 2 rounds of shots from preconditioning, they sold with an $8 to $10, even $15 premium in some cases. At St. Onge Livestock, as we look at some of our local auction markets, 10,000 head sold recently, and prices did hold pretty firm. 4 to 4.5 weight steers selling 4 to 6 better from 204 to 212, 450 to 5 weights from 189 to 197. The lighter end of the 5 weight steers brought 178 to 186, 550 to 600 pounders from 170 to 178, and 6 weight steers selling primarily in the 160s. After holding up surprisingly well through the summer, the cow market, like we said, ran into a lot of pressure, and it did get a little bloody there for a minute, but prices did recover towards the end of the month. Across most of our auction markets, the big fleshy cows seemed to sell from the mid-50s up into the low 60s, although the thinner cows primarily from 45 up to about 52, but there was a while there they were selling for less than 40 cents, so glad to see some recovery in the cow market. We're starting to get into the time of bred cow specials. Torrington Livestock held their first sale of the fall, and prices did reasonably well, although we are seeing a lot of cows come to town. The younger 2 to 4-year-old cows sold from $1,300 to $1,550. 5 to 8-year-old bred cows anywhere from $1,100 on the lighter side up to $1,500 for the bigger cows, and 8+ short-term cows sold from $760 to $975. Then at the J&L Livestock Montana Angus Female Bonanza, prices actually did better than last year's average with a lot of demand from out-of-state buyers, those that aren't fighting drought and high feed costs right now. Overall, the commercial heifers averaged $1,620 per head and the bred cows $1,977. The lamb market did get forced down by larger supplies coming in, but these prices are light years ahead of last year, 40% better on the average, and we're even seeing a lot of ewes selling above the $1 mark right now. At the Bowman auction market, 70 to 80 pound feeder lambs most recently sold from $259 to $266, and the 80 to 100 pound lambs $234 to $247. Well, I think we're all ready to flip the calendar over to next year and hope that Mother Nature is more cooperative in 2022. Doesn't look like we're out of the woods yet on drought, though, as the National Oceanic and Atmospheric Administration says drought could hang around for a lot of the West through the next couple of months, and things could dry off in the southern plains as well. As we start looking at budgeting towards next year, costs are going to be higher in 2022 as well. Corn prices likely not going to move much below the $5 mark anytime soon, and hay supplies are likely to stay tight into next year, even if we get some moisture, and that's going to keep prices high. And then when you consider just the inflationary pressures and supply chain issues we're dealing with, it's probably going to cost more to operate in 2022. But on the positive side, analysts do seem to agree that cattle prices are going to be stronger in 2022. It's been a slower recovery than we were hoping for, I'll admit that. Fed cattle supplies are working lower, but just not as quick as we were hoping for. Marketings have been underperforming, and that's due in large part to just the packers that are struggling to get labor in to process cattle. So that's created a difficult situation, but the fact is there's less cattle in the pipeline, and as we look towards next year, more packing capacity is going to come online. So we will have more competition for these fed cattle. It's just going to take a little bit of time to get there. And as we look at beef demand, it's still strong. 30-year highs for beef demand, and on the export side, we're going to break records this year. August broke a record, over $1 billion of beef sold in 1 month for the first time ever. So there's a lot of things to like about this cattle business. We just got to hold on a little bit longer. Well, thanks so much for joining us for today's report. If you want to find more ag news and market information, you can visit us online at northernag.net. Big thank you to our sponsors again, Ide Bailey, Montana Fish, Wildlife and Parks, the Wyoming Beef Council, and of course, Ag Risk Advisors. Thanks so much for joining us. We'll see you down the trail.